Good afternoon. My name is Tanisha Broadway, and I'm the president of the Sacramento Realtist Association. Today, we will be providing you with an intro to the home buying experience. Now, presenting for you today will be myself, Tanisha Broadway, as well as Terrell Keys with Gorian Thompson Real Estate Inc., and Valencia Miskiel with All City Homes. Now, let's jump right into it. There are certain people involved in the real estate transaction, and we'd love for Miss Valencia to go ahead and explain to us who actually is involved in the real estate transaction and what do they do.
Hey, Tanisha, thank you so much for that warm introduction. Welcome again, everyone. My name is Valencia Miskell, and I'm with All City Homes. And today, I want to share with you some of the key players in a real estate transaction. So let's just get right to it. Our real estate professionals. We have a real estate agent, that's a licensed professional, who acts as an intermediary between the seller and buyer of real property. Next, we have the real estate broker. And the real estate broker is, of course, also licensed, but they have a higher level of responsibility and liability. They have their own brokerage. But in order to have your own brokerage company, you must have a broker's license. Let me just say that again. You must have a broker's license. Then we have our real estate broker associate. That's a real estate person who holds a broker's license, but they choose to associate or affiliate with another sponsoring broker. And they do that instead of opening their own brokerage. But they will have the right at any time to open their own brokerage if they so choose because they have that broker's license. So let's move on to our agency relationship. In the agency relationship, we have a listing agent. The listing agent has a contract with the seller. They represent the seller in the real estate transaction. They put the sign in the yard. They market the property. We have our selling agent. The selling agent represents the buyers. Okay? So they're the ones that are taking the buyers out and they're showing them the homes and they're writing those offers, hopefully getting them accepted for those buyers. Then we have what's called dual agency. Dual agency happens when a real estate professional, same real estate person, such as myself, I go out and I have a contract to represent the seller. I also have a buyer's representation agreement to represent the buyer in the same transaction. I'm going to represent both of those parties. We're going to move on to our mortgage players. Let's talk about the companies first. We have banks, and the banks are the full service institutions, the ones that have the checking, the savings, the CDs, the Wells Fargo's, the Bank of America's, the U.S. banks. But they also do home loans, okay? And then we also have mortgage broker. That's the middleman between the borrower and the lender. And what they do is they shop your mortgage with other lending institutions. And we have our mortgage banker. They only do mortgage transactions. And they fund their own loans. And then within that mortgage group, we have our mortgage players, such as the loan officer. And that is the person who initially takes your loan application, like Miss Tanisha Broadway, qualifies you, runs your credit, gathers some other paperwork, and then provides you with a pre-approval letter. We have the loan processor, and that loan processor is the person who works closely with the loan officer, and they help to process that paperwork that you're submitting. Then we have our loan underwriter, and that is the person who makes the final decision on your loan. They say yay or they say nay, and we hope that they say yay in most circumstances. Our next team of players are escrow. We have our escrow and title company. And that company is going to handle the changing of title from seller to buyer. From the time an offer is accepted, when you write that contract and it's submitted and it's accepted until it closes, what we call closing of escrow, until that period happens, that escrow and title company will be involved. We also have title officer. And what the title officer is going to do, they're going to research the history of the property. They're going to check the deeds, they're going to check the liens, they're going to make sure, that the property is going to transfer free and clear from the seller to the new buyer. They're also going to prepare what's called a preliminary title report. And that's a written report of the findings of the history of the property. We have our escrow officer, and they handle the escrow period, changing of the title from the seller to the buyer. Then we move on to our inspectors. So we have a home inspector. They're going to come out and they're going to inspect the quality and the condition of the home. They're going to prepare a written, detailed report, and it's going to have all the findings and conditions of that home. They're also going to have it itemized, right, in categories. It's going to make it friendly for you to be able to read and understand. And your realtor will also help you decipher that home inspection report. We have the termite and the pest inspectors. And they, again, are going to come out to the property, and they're looking for things like dry rot and pests, such as subterranean termites or wood-boring beetles. And so they have sections of the report. They have a section 1, they have a section 2, right? And the section 1 is similar to if you have a leak underneath your sink and that floorboard of that sink is damaged, that's considered the section 1 work. And then you have things that could be potential damages. And those are more considered section 2. And they can end up needing to fumigate the house because they find, subterranean termites and wood-boring beetles there. And then for homes that are built before 1978, you can have a lead-based paint inspection done. And they're looking to see if there's any lead-based paint in the property itself. Okay? There's one other inspection that you can have. It's a sewer inspection. Highly recommended to make sure that there's nothing clogging in those sewer pipes of that home that you're going to buy. Our other inspectors are the appraiser. And the appraiser is going to determine the property's value. He's going to prepare a detailed report about the property based on the condition, the size, the location, and other variables. He's going to also indicate its value. And hopefully that appraiser's report and the value of that property will match what you have on your purchase contract. We have our insurance agent, and they're another player on the field in a real estate transaction. The insurance agent is going to help you obtain coverage for the property. In the event of any physical damage, you want to make sure you have that property properly insured. Then you can get a home warranty. The home warranty provides you something of an insurance policy, right? It's going to help you with repairs and replacement of certain items such as your HVAC system, your plumbing, your hot water heater, certain things like that. So if they are damaged after you close escrow on your home, you call that home warranty company. They'll send a technician out. They'll assess the damage. They're either going to repair it or they're going to replace it. So a home warranty is something that you should maintain on your property for the life of you having that property. It's likened to car insurance. We maintain car insurance on our home. And when we have an accident and we need it, we pay a deductible. With the home warranty, when you need it, you call the company, You pay a service fee, they come out and they do what they do and they make the repairs. So those are just some of the key players in a real estate transaction. And I'm happy that I was able to share some of that information with you today. Again, I'm Valencia Miskell with All City Homes, and I can be reached at 510-306-8187. I am located here in Sacramento, but my phone number is 510-306-8187. Thank you for your time.
Thank you, Valencia, for that wonderful presentation. So you guys, now you know who is who and what is what. So you want to get started. You want to go look at houses, right? Well, there's a process to that. We would like Terrell Keys to go over the actual home buying process.
Hello, everyone. My name is Terrell Keys. I'm a real estate professional over at Gorey & Thompson Real Estate, and I'm going to talk to you a little bit about the process of buying a home. So anytime someone reaches out to me about buying a home, I have them come in for a one-on-one buyer's consultation. During this consultation, I'll just have a conversation with the buyer and see where they are. You know, some people might need help with their credit. Others might need time to save up for a larger down payment. And then some buyers might be ready to go straight to a lender, which is step 2. And that's getting pre-approved for a home loan. This is very important because you sit down with the lender. They help you fill out the loan application. You submit all of your financial documentation, such as your W-2s, your tax returns, and check stubs. And then we'll see how much you can qualify for to purchase a house. Once you're done with the lender, you'll know 3 things. You'll know how much you're approved for, how much your monthly payment is, and how much you need to bring to the closing table. Okay? So once they issue you a pre-approval letter, then you'll reconnect with your real estate agent and we'll help you start looking for properties. We'll talk to you about how many bedrooms or bathrooms do you need, the square footage of a property, the neighborhood, where do you want to live, and if there's a specific school district that you want to be close to. So once we find your dream home, then we'll help you write up an offer on a property. We'll write a contract on it. We'll help you write an offer that will stand out from the pack. You know, in this market, you know, sellers might want to look for specific things in a contract. They might want to look for the highest and best offer. They might want to look for an as-is deal, and they might need a rent back on a property so they can find another property. So there's little things that we look for and put into a contract that'll help make it stand out so that you can get an offer accepted from a seller. Once we negotiate it out and you do get an acceptance, then they'll open up escrow. Escrow is a third-party company that transfer title from the seller to you as the new owner. So anytime you hear someone say, I'm an escrow, that just means, you know, title of ownership is being transferred. So that's a great thing. Once you're in escrow, I'll help you, or your real estate agent will help you set up your inspections. You know, we always recommend having a home inspection so that a licensed home inspector will go in and give you the universal look of the house. You'll know the ins and outs. We'll have a roof company come out, check out the roof, make sure it's in good condition. We'll have a pest company come out to look for termites and any type of dry rot that's around the house. And we'll also have a plumbing company come out. They'll check the sewer lines underneath the house to make sure there's no roots, no blockage, so you have a good flow underneath the house. It's very important that we get all these inspections because we want you to know everything up front then versus not doing any inspections, getting into the house and then having roof problems or plumbing problems. So before you sign on that dotted line, you'll know the ins and outs of the house that you're trying to buy. So once that's all done, we'll finalize some more details and then we'll make it to closing day. Closing day is the day that you'll get your keys, you can move in, and voila, you know, you're a homeowner. Congratulations. So this entire process usually takes about 30 days. It could be done faster. And if some delays come up, it could be longer. But generally, we shoot for 30 days and we get it done. Now, it's very important to have a real estate agent with you during this process because, for one, we're like supercharged search engines. We know there's a lot of public sites out there, such as redfin.com and realtor.com, but as agents, we search the properties daily. We know what's coming and going, and sometimes we could find that gem of a property that's not listed on the open market. Another reason to use a real estate agent is because we want you to use our expertise. There's a lot of forms, documents, and disclosures that go into a contract, and it's our job to know those forms inside and out and to be able to convey them successfully over to you as a buyer. And last but not least, we're expert negotiators. Like I said before, when we're writing up offers on your dream home, it's very important that we reach out to the listing agent to see what the seller is looking for in an offer so that your offer stands out from the crowd. Once we get an offer accepted and we do our inspections, things might come up. So it's very important to have an agent that's going to advocate the best deal possible for you in one of the biggest transactions.
Thank you
of your
so
life.
much, Terrell, for that awesome presentation. So now you guys kind of get a gist of who's who, how the flow works. Now, what I want to talk to you about is actually getting pre-approved, right? The foundation of being able to buy a home. How much can you qualify for? Well, what do you need to do in order to be able to qualify for a home, right? So that's where I come in. So I'm a loan officer. I've been a loan officer for over 17 years, and I specialize in first-time home buyers and down payment assistance. And when people come to me and they say, I have some credit problems or I have some challenges, I always tell my clients it's never a no, okay? It's maybe a not right now. My job is to customize a loan scenario that fits your needs or customize a game plan to get you into position to buy, okay? So the first thing I do is I'm going to pull your credit, right? I'm going to see where your credit score is. Now, you have to have some credit in order to buy a home, okay? You're going to need to have at least 3 trade lines. What are 3 trade lines? So when I pull your credit, I'm going to need to see that you either have currently or have had 3 accounts that you've been making payments on. So that would be, a car note or a credit card, things like that, things that are appearing on your credit. And so you need 3 of them. When I pull your credit, you get 3 scores. You have your Experian, your Equifax, and your TransUnion. The middle score of those 3 scores is a score that determines your eligibility. Now, I can provide financing with someone with a credit score as low as a 600, but with a 600, you're not getting any down payment assistance. That's just giving you an intro to being able to buy. So you would have to come to the table with all of your own money, okay? But if you have a minimum of a 620 credit score as that middle credit score, then we can absolutely explore the down payment assistance situations, which basically is just a wonderful opportunity to lessen that out-of-pocket burden. That's what down payment assistance does. And there's so much involved in that. I won't explain all of that on this video, but we can definitely set up a one-on-one consultation and go over your specific needs, right? So once I look at your credit, I need to look at your job situation, right? So yes, you have to either be employed in order to buy a home, or you need to have a established amount of established income coming in every month from a credible source. So if you're on a fixed income, you're receiving Social Security or retirement, or you're a veteran, you're getting veterans benefits, right? It can't be like unemployment income, right? Or if you're a W-2 worker, right, you have to be receiving paychecks, okay? You have to show paycheck stubs. You have to have had a job for at least 2 years. Okay, not on your same job for 2 years, although that's helpful. You could have had several jobs, but that just equal a total of 2 years. So you have to have 2 years of work history. If you are not a W-2 person and you own your own business, you're self-employed, then I would need 2 years of tax returns in order to figure out what your income is, because we use an average, right? So if you've been doing Uber for the past 2 years, or you're a barber, a beautician, or a cook, or something like that, and you receive 1099s, then you're considered, self-employed, and I would need 2 years of tax returns in order to figure out what your income is. So let's say you have that. Then from there, I look at your income, I look at your credit, and then we're looking at your monthly outgoing bills that you're paying from your credit, right? So we're looking at a car note, we're looking at a student loan payment, we're looking at a credit card. I would add those all up, all those monthly payments that you're paying every month. That's one number, right? Then your gross monthly income, that's another number. And then I would divide those together, and that's going to give me a percentage. And based off of that percentage is going to tell me how much house you can qualify for. Okay. I know it sounds kind of tricky, but again, your situation is going to be specific to you and we can figure out your numbers. But the rule of thumb is if your debt to income ratio is below a 45%, that pretty much can open the door for most programs. In some situations, I can exceed 55%, right? So that's for someone who is trying to maximize their opportunity and get as much house as possible. We're going to try to take that debt to income ratio up to 55%, right? So we can talk about that. But then basically, once I'm looking at your income, your assets, okay, let's talk about that. So yes, although down payment assistance is the way that I want to help you get into, there's always still going to be some out-of-pocket expenses when you're buying a home, okay? I like to tell my clients, if you have anywhere from $3,000 to $5,000, if you're using down payment assistance, that's a great place to start. If you have, $5,000 to $7,000, that's you're even in a better position. And of course, any more than that is awesome. But to get the ball rolling, if you have at least $3,000 to $5,000, we can get started with that. Okay. Now that money can be cash. You can't have mattress money. That money has to already be in an account. That's extremely important. You can get a gift from someone as well. That money, though, that's going to be gifted to you, that can't be in a mattress. That money has to already be in an account, right? Because everything has to have a paper trail. So just kind of remember that as you're trying to figure out where that money is going to come from. That's very important, okay? Let's see real quick. Doesn't matter if you had a bankruptcy or foreclosure, things like that, doesn't prevent you from being able to buy. There are timelines attached to those things. So you may have to wait a little longer in order to buy if you've had to experience some of those things. So just keep that in mind. If you want to bring someone in on the purchase, like as a co-buyer, you can do that, of course. If you're married and one of the spouses doesn't want to go on the loan, or the spouse that wants to buy the home only wants to buy it by themselves, you can do that. However, you have to be in a position where your credit's strong enough for you to go conventional financing. There's several different types of financing. You got conventional, FHA, VA. Conventional financing is someone for stronger credit, typically higher, credit scores, just a kind of a more stronger profile. Okay. FHA financing, typically first-time home buyers go that route. It allows for more flexibility in some situations, higher debt to income ratio options sometimes. But one of the things that's really important about that when it comes to a married couple is, let's say you're married and you want to buy a house, you don't want to add your spouse on, okay? But if you have to go FHA financing just based off of your profile, maybe you don't have the best, you can still qualify for financing, but just not conventional financing, and you have to go FHA. I would still have to pull your spouse's credit and add your spouse's liabilities with yours. So if you have no debt, right? You just don't have the highest credit score. So that's why you have to go FHA, and your spouse has, a monthly outgoing bills of $2,000 a month. So now you got $2,000 a month against your debt to income ratio, right? And so now that's going to affect how much house you can qualify for, because now I had to add spouse's debts into the deal because you want to buy without the spouse, but not using spouse's credit or income, if that makes sense. So it gets a little tricky when you're trying to buy a home without the spouse and your credit's a little shaky. So again, we can talk about that more if that is you. But other than that, that's kind of like an intro to some of the processes with the loan. Again, you can reach out to me directly. I would provide you with my link. You fill out an application, and that kind of gets this ball rolling. Now, keep in mind, if homeownership is something that you want to take advantage of sooner than later, then we need to talk immediately. Even if homeownership is something that's a year out for you in your mind, you need to start the process now to figure out exactly where you are. Because if you're not quite purchase ready right now, again, I can customize a game plan and help you get purchase ready real soon. Okay. So we appreciate you guys watching our presentation today. Again, if you have questions, you can reach out to us anytime. We look forward to getting you into a home, and take care.